I'm going to give you guys a little bit of an update on some past tweets, right? Just kind of show you a couple different things. All right, so this one, I can find it quickly. There you go. Okay. All right, so let's just look at this thing. This is going back, what day is this? October 22nd, right? So it's long before any of this happened. And we say, basically, I was just talking about the price action. People were already complaining about price action at that time. And we had an interesting setup, which I won't review too much, but we were basically going into that all-time high. But the way we did was a little bit unusual. I was actually expecting, I'll come back to this in a minute, but what I thought was that we were going to enter a big consolidation here. And that was my thought process. Like, all right, this is going to be part of a big, complex, complicated process. And it is, obviously, by the way, but I was actually a little caught off guard, surprised that we leaped first. I said, oh, okay, but nothing happened. We'll jump into that more, but I just wanted to give you a little context of this particular tweet here, right? Which was basically to say that I remember taking all-time weekly highs. This happened way back in the day here. We're going back 4 or 5 years, right? Till we came up to the all-time high, had a nasty drop. Now, this is a weekly chart, right? So we grabbed it intraday. We lost 34%, right? And that's a huge drop, right? 34% in price. Then leaped again back into all-time high. So, I mean, this is normally an ideal play for me. Anyone that knows me understands that I am so willing to switch sides. When you're really confident in your TA, when you're really confident in your technical analysis, when you feel confident that you're putting yourself into a position. Some people saying the sound is bad. That's weird. So I got some people saying the sound is good. Others saying it's bad. Give me a quick update before I jump into this again on that. Echo, huh? Let's see what's happening. Let me see if I can work this out. Maybe for some reason I'm not. Looks good there. I love the comment. It's muffled. It's bad. It's good. It's great. It's better. It's funny. All right. Anyway. Much better now. All right. I'm going to take your word for it. We're just going to roll for it. If everyone starts crying again, we'll basically we'll stop and try to fix it. But that could take some time. So let's just kind of roll with this for now. All right. So getting back to the point, right? So basically, we leaped into the all-time high, lost 34%, right? Now, not good, but ultimately, and this looks a lot worse on the daily. Again, I'm showing you on the weekly. I just really wanted to do that at this time to kind of show people the chart condensed so they can understand it. But ultimately, what then happened is we then reclaimed that all-time high. That usually is a beautiful signal, right? That head fake. So you went from a position to it's like, uh-oh, it's a swing failure of sorts. We're headed south for a bit. Then immediately reclaiming that to close at an all-time weekly closing high. And then that again drew back 34%, right? That was before any of this just happened here, where I was talking about you did expect some trickiness. But the key to that is that what I was really expecting was for that to kind of occur in this mode. I thought we'd get something complicated. But we ended up getting something complex, just a little bit different than what I thought. Where we did go back up again, saw the failure, and then, of course, it's been really just straight selling since. You're going to hear me say that a lot. The other thing I'll point out is that this particular tweet that we talked about, which I said, look, I love pullback and consolidation because it allows the public to see the real truth. We're all guessing, right? But the key is to have edge to identify what are the go times, right? What are the when you have a more likelihood for this consolidation. And that's kind of the idea behind True Vibration, to give you a little bit of edge in those type of scenarios. And the reality is we've been in this red momentum stage the entire time, right? There's been no scenario, right? You go back from this all-time high here, you enter here, pull back, and this entire time you're looking essentially at red. You had a little flash here where there's a possibility that lasted a day or two, and that was it. And then since that time, there's no scenario where you're thinking it's go time. Now, a good question would be, well, what would that look like? Well, essentially, what we want in this environment And that's for people that use the tool. If you don't use the tool, just ignore this particular session. But there's a lot of you guys out there, so I'm just trying to help everyone that's in on that. But the point is that you can identify this without having to be super right? I didn't know the future. I didn't have a crystal ball. I wasn't, 10x short or anything like that. But I did know this isn't go time, right? And it puts you into a situation here where you say, all right, well, look what we have. You would want this guy to cross over. This is FSR. You want it to cross over. I shouldn't have chose white. That's okay. But I want to cross over this full vibration. And then at some point, I don't care if it goes high. I don't care if it's not high. I want it to come back and have a pivot above that full vibration. That's the key, right? We want to see that, right? Whereas here, what we've seen, anytime you see these head fakes, right? You're basically just a little cross, but notice there's no follow through at all. In fact, there's a little head and shoulders pattern that's nasty, right? We pointed that out at the time. You see that FSR head and shoulders pattern. At that point, yeah, you're in bad shape ultimately, and you would have known that at 60,000, right? To where you, and again, I'm okay with just saying, hey, sit on the sidelines. You didn't have to be short during these times, because there's still positive things on the weekly. We might talk about that, but the idea is that you want to see some element of that where you not only claim, but then have a pivot above. Now, we might be dealing with a very complex structure. We'll see. I mean, we already are, but how dragged out it gets is going to be remain to be seen. And it's very interesting how it's played out so far. But the one thing that has happened is it's been clean. What you're looking at here, in case anyone's wondering why this box is here, because I'm actually about to delete it, but I might as well mention it beforehand. Let me get rid of this. Oh, that's not working. No, there you go. All right, I'm going to get rid of everything, but first, just to show you, all that is just looking at that weekly range that we saw here, this pivot, which is kind of where we fell in. We've spoken about a couple key things here. We wanted to hold this top side. When we lost that top side, even though we were ranging, this was already shaky, essentially on the weekly close, which was at 58.6. And you're just opening the door to other elements. You're opening the door first to this top side. Once you lose that, you're opening it up to the entire range, right? This is just basic support and resistance, market structure type of things. Now, this is on a weekly scale, but the idea is that you can see that, yeah, I mean, we would have to be prepared for the fact that we certainly can play in this range for quite some time. And we can see the bottom side of the range and the top side of the range. That's just how that works. And ultimately, it does need to reclaim this area and close above it to escape it. So that's what the Bulls want. Let's go back in time a little bit, and I'll do a quick review. I think it's important. I mean, we've talked about this. It's the only thing we've spoken about, right, on Telegram, right? I'm getting some messages on Telegram like, how'd you know? I didn't know anything, right? I just pointed out. Remember, the idea here is like, I want to point out both sides, and you should be doing the same, in my opinion. Everyone should always do that. This is basic market structure stuff. We're not going to do like a lesson on it right here, but ultimately, a little bit of a range. I'm going to take the low always. What I'm doing is I'm taking, before failure, I want to take that last low to a high. You can do this a couple ways, right? I could have actually, if on a different time frame, I could have taken it from here to here and see that as the range as well from this particular level, and it would have worked just fine. But I'm taking the last low right before the last takeoff, right? So that's what I do, coming back to the top of that particular range. And that's going to be the zone that you don't want to see reject, or if it does reject, you want to play short off. So the moment we lost this, we had a very clear conversation that should we come back to this zone and resist, this is on Telegram. I'm not going to pull it up right now. I'm going to have to show that. So just take my word. But if you're on Telegram, just scroll up and you'll see that. On this particular day, November 10th, is when we posted it. And we started to talk about what the shorts were. We also said, hey, when you're down here, any type of bear exhaustion, if you don't understand that phrase, no problem, we'll get there. But any type of ugly candlestick, right, a bearish looking formation of any kind, are going to be good for your shorts, right? We said we needed to get back above this level right here on close, on an H4 close, to start talking about things like bull dreams again, right? But the reality is it just never came to fruition. So when that happens, I mean, you did hold this range here, maybe there's a chance, that was good. Normally you get these real ugly candles that it looks like it has a nice bounce back, and there was some demand that came in. But it's very common that when you don't see this thing recover all the way. Now, this is intraday. It's more important on the daily, of course, but normally you're going to see that retest, right? So that's a very normal process to see, and we're kind of dealing with that now. on the daily scale. But regardless, it's a situation where this is a supply bar, and then ultimately they're going to find that liquidity. Where's the liquidity at? It went down, it went back towards this top side again, rejected. You had four rejections in a row on the 4 hour, right? And a qualified short on H4 on true vibration. Let's just call it what it is, right? This is the perfect signal, which we did map out, right? We mapped that out. We were talking specifically on H4. And yeah, that's giving you a short, even if you wait to the close of that candle, which is perfectly fine. And something I would tell you, you have so many things going. Bearish exhaustion, right? You have hidden bear divergence, right? You're in a situation on multiple time frames. Bearish candlesticks, right? You have a local low now, right? You started to range, you lost that range, okay? So many things were happening there that call that a short, or let me be out of this, right? If we were listening, if we were willing. And the only thing I want to do is I want to know what has happened. What will happen, that's crystal ball stuff. We don't know. Nobody knows. They're lying to you if they say they know. If they happen to get it right, great. That's our job. That's what we're trying to do. But either way, it was a guess, right? So therefore, master what has happened. If I can master what has happened, I'm going to have a clear mindset for my guesses, or I'm going to know, hey, this is the time to take a position, and maybe this is the time to sit out till I get more clarity. And for each person, it might be different, right? You have to look for systems that make sense for you and your mindset and how you go about things, okay? Also, very simple. We want to draw in. There's a lot of ways to draw trend lines, but certainly we want to find out where we're at. This one's been pretty clean. You can see intraday break, right? But that's not going to be a daily scale break. Even if it was lost after. But ultimately, you see how it was not. This has held perfectly. That is our primary downtrend line. Bears be the one to hold it. Bulls want to take it. And by the way, taking it when you're in this big of a dump and this big of a formation, taking it doesn't mean you're out of the clear by any stretch of the imagination. It just means like, all right, let's go run somewhere else, see where we stop. Maybe the 0.618 and this guy's going to reject again. We're going to find out if we can get past any of this stuff, and then kind of build on a bigger formation. There's a possibility there. So don't think like, hey, if I take this, we're off and running. It may happen that way, but it also may not. But just focusing on where we're at, just to review this red line right here. For some of you, it might look the same, but this is our H4 200 EMA. Anyone that knows me knows that you will always see me with the 200 EMA. If I was going to have one moving average on the chart, it's going to be the 200 EMA on any time frame. For me, that's my bull bear type of line. It's not concrete, but it's as close as it gets one. Why do I bring it up? Because again, on Telegram, what were we saying? We lost this level. We said, hey, we don't want to see it reject. Well, guess what? It started to immediately reject upon that. So that's Telegram. That was right here. And ultimately, we say, look, you want to see this a quick reclaim. Because that happens a lot. Sometimes they'll lose. You have the 200 SMA running around. A lot of times you'll be in between the two. That's a decent look. But you just don't want to see this reject. Well, it rejected 3 candles in a row, right? And that basically led you to a little bit of a base drop supply zone for people that understand that language. For those that don't worry about it. But ultimately, you just have this little bounce, right? An ugly candlestick, right? An exhaustion candlestick back into the zone that was lost. This is very weak, and that's why you had that dump out. And again, they're going to sell it for as long as people don't push back, right? So that's the answer. You want to dig out of this. You got to spring out. You have to have a sign of strength that basically holds. Some follow through on that. All right. So then, what do we start to see, right? I just want to, again, for some people, they might say this is fairly basic stuff, and I get it. I agree. But it's the basic stuff that really matters, right? So we just want to kind of understand, because I think the basic stuff is also the things that people forget the most, and basically put themselves in a position to where they lose sight of it, right? So what ends up happening? Lower high, lower high, lower high, lower high, lower high, right? You tried, but it just wasn't happening, right? Lower high. Pretty simple, right? So what do we say back here? You have to make some element of a higher high. Now, if you make the higher high, you still have to put in a higher low, and then yet another higher high. But until that happens, this is basic market structure 101. You're in a downtrend on this time frame. That's happening. It's a real situation. If it wasn't obvious before, it should be once you start to see this formation, because this is a typical scenario. What's happening? Trap, 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 over and over and over again. And of course, these plays, by the way, we've seen it constantly. What are we seeing here? Don't even have to look, but just to show everyone, we're getting what? Hidden bear divergence, right? And we're seeing it over and over again, right? Lower price, higher momentum. Now, again, the key is you can see that and have a drop that holds the low, and then you might start to base and go the other way. Eventually that will happen. But you want to take out one of these hidden bear divergence to begin the process of what? Reversing everything, right? So there's no reversal until you take one of these guys out. So then it happens again, right? This is even uglier, right? The fact that it's continuing on just means that it's now happening on a higher time frame as well, which you don't want to see. So you end up in the same situation right here where you're saying, all right, well, essentially I'm lower price. I couldn't even take out the high of this level, but yet I'm making a harder push. It means I'm putting more effort, right? I'm drowning myself. I'm putting more effort into it. So then what happens? They start jumping off the train, right? Oh, this isn't happening, and ultimately things roll over. And that's pretty apparent, right? You can see that in the momentum. Once it's lost here, no good. You're going orange, you're going red, and then you're dumping out in a big way. So pretty straightforward again, right? So I mean, this has been straightforward. I don't want to delete everything. I do want to keep that line in there. But it's been cut and dry from that standpoint, ultimately in terms of, hey, we want to see something taken out right now, that level, just so that we're very clear. Happens to be right here. Now, does that mean it's over? No. I mean, reality is this is pretty ugly. But you do want to get past this. Probably when you do, if you did get past this in the near future, in the next couple of days, then you would take out this primary downtrend line, which would be a good start. And that's what we're looking for, a good start. Now, obviously, if you see a huge candle, green candle, well, then, yeah, that's a sign of strength of some sort. And that's a better way to go about it. But until then, we're just observing, and that observation is going to come in the form of looking for a market structure change, even on this low time frame, because there's been some damage that's been done ultimately. And again, there are people that want lower prices for sure. They would love to collect at lower prices. Big money is typically patient money, so they're going to be as patient as possible. But from this moment on, we kind of laid out the game plan of how to go about this. There was one or two like little buys that popped up, right, that we did talk about that kind of worked out pretty decent, right? But we said that everything's going to be low time frame. You're watching it like a hawk ultimately. And the short process that we spoke about, it just flat out has worked out perfectly. There's no other way to look at it. I haven't personally taken a lot of short. In fact, I think I took one, right? So even though I might have mapped this out on Telegram, I've been busy. You know what I mean? I'm not sitting here trying to short things unless I know that I have the time to kind of keep a decent eye on it. But when you're running around, it wasn't ideal, right? It wasn't an ideal scenario for that. Well, we certainly mapped it out, and the idea, again, is just more talking about a process of how you yourself can do it. You might already be great at it, but it's just another way. Now, let's just take another look at this from a perspective of the directional bias indicator. Now, on this, we're looking at everything. I'll just kind of give everyone a look. Now, normally, you guys won't see it this way. I just have it set up like this. I know some guys have set it up like this as well. What do we see? We see that the weekly, by the way, is still green, right? So, okay, that's good. For the moment, though, I'm going to kind of get rid of these just to eliminate some things off the screen. Forgive me for all that up there. I just don't want to delete it right now. But let's just look at the 5 minute through the day, right? And directional bias indicator is a way to sharpen your trading. It will improve. I want to explain this. This will improve any strategy that you already use, any technique that you already use. What do I mean by that? Well, if you happen to have a short technique that you like, right, and the directional bias indicator is red on that time frame, when your particular setup appears, or a lower time frame, you can go 2 to 6 time frames below if you'd like. But if that happens, I have no problem saying that this will improve your own strategy, right? And that's what it's really about. That's the idea. The idea of tools to help you improve your own process, right? Because you can do my process, but again, I'm not there on your shoulder in those times of, hey, should I buy, should I sell? So ultimately, that's not going to help. I want people to fish for themselves, ultimately. Anyway, so what do we see? Why bring this up? Well, look what happened. I mean, back in, I'm going to change this to an hour just so it kind of messes up the view a little bit, but I want to get back to the top. And things were flying, right? So, I mean, we had this beautiful move up. We had another follow-through fake out here. Really what I'm going to look at here, though, is going back, of course, to 1 hour. It's not popping up on me. That's okay. The point is that from this particular time frame, right here, let me mark it off. Let's say even here, even before that, to be honest with you, right? But going back there to that level, what you'll end up noticing is that the directional bias indicator has been 95% red, right? So it's been, that's when I say clean markets, I mean clean price action. I know a lot of people talk about things like chop. Chop is the thing that's hard and painful, but in reality, again, I mentioned it earlier, it's been lower, high, lower, low, lower, high, lower, low. It's been very clean. There's been a couple little built-in consolidations beyond that, but look at what we're talking about here, right? So the low time frames, obviously red even before that, but even from this time on, see the 1 hour, let's see if we can move it back to about there. Let's call it right there, right? So here at this level, again, you're talking 63,000, 64,000 level. Notice the red, especially anytime you get all red like this. This is not good. This is a bad setup, right? It means the bears have a lot of, all the momentum players are basically going to be on their side, right? If they're doing it right. Now you'll see some green pop in, but this is low time frame stuff, 5, 10, 15 minute. Nothing's really happening there, right? There's no market structure breaks of any sort that we mentioned, and that's what's needed to reverse this. And then ultimately, again, you go back, now at 59, 60,000, again, we're back to all red, right? So they tried, they failed, you're all red again, this is bad news, you dump out, right? This is the idea of the directional bias indicator. You don't have to have all these on, but you can just have one on, it's fine. You know, just kind of keep an eye on the 1 hour, the 2 hour, the 4 hour, etc. And you'll see things like this 4 hours, just red, active red the whole time. And active red is even stronger. Now, last red means, okay, that's already problematic, it needs to go green. But active red is a more, obviously a stronger signal, which puts you into a position to understand that this thing has to see a significant reversal. So in that, and it goes back to the market structure as well. Probably that market structure break would reverse that. But until that time, in reality, if we're trying to play it wise, safe, less risk, higher hit rate, then you're trading in the direction of the directional bias indicator. So DBI, which is directional bias indicator, I mean, literally has crushed this thing, right? and that's the idea. We want its help, right? Same thing. You see these low time, everything's already red, right? So then when these other time frames roll over, and sometimes, by the way, I shouldn't say that. I see a little time here where things were popping up, but they did their job too, right? So you went green here up to the 1 hour, even to the 2 hour. But again, you don't want to see structure loss even on these low time frames. When that happens, it does happen, get dump out again. So we've seen that time and time again. Let me see what else we got here. Don't know how far deep I want to go. Okay, so the major dump comes. What happens again? Same thing. I mean, literally, forget the first leg of the dump. Let's just say at 54,000 and change, you basically were in a situation, actually near 55,000. So right around 55,000, you're in a circumstance where we go all red, right? All red. Again, everything is red. There's no green showing up at all in that situation. And that's when you had the dump out, right? So this is the type of edge that you want to understand. Again, maybe you didn't short, but at least you wouldn't have been caught in longing this. I mean, tell me what reason you would have been longing this with every single thing active red. Very, very few. I mean, you'd have maybe on the 1 minute on a couple instances. I'm not going to zoom in and look, but that's kind of the idea. This is what gives that kind of edge to understand that when you go active red on everything, it doesn't mean you're always going to have a mega 15, 20% type of dump. But sometimes you will, right? So that's the key. That's what people miss. It's going to put you in a position where you're not going to get hurt very often, but you're also going to hit some home runs. Not always at a home run, right? Because that's not realistic. If you always hit a home run, you're a billionaire in a few weeks. But it gives you the setup to know, like, okay, you know, like, and if you were trading on this day, I'm going to be straight up. You should have been short, right? There's nothing here to see that wouldn't have told you I'm looking for some great reasons to short, right? And you could have added a few different strategies. I have a video specifically on shorting with the DBI, and it has been crushing. I have some people sending me some numbers of how they've been hitting on that thing. It's been unbelievable. I also have another group of people that have been combining I mentioned this video that we have, but I have a scalping video. It's an old scalping video, and they've been combining the two. So it's another one that's available as well that combines an ATR scalping setup along with it. Some other people, there's scalping signals that are already set up on true vibration. I think the first one that's there is usually the more accurate, but the other ones give that more active signals. They combine those as well with DBI, and again, they're seeing tremendous success with that. So again, work smarter now. All right, other than that, now let me just kind of jump in and see where everyone's at with the questions. I'm going to have to go to the very top and see what we missed. That's just a basic review. I mean, I guess we can do some market structure stuff, but let me actually do that real quick. I did mention this earlier. Let me delete this again. Actually, we did the market structure, right? Yeah, you're right. Good job. So we talked about that part. On the weekly, we know where we need to be. On the daily, let's kind of peek at this again. Same scenario. You do want to see this. Now, I did say earlier, actually yesterday again on Discord, we talked about this yesterday, like, hey, yes, things have been straight down, but finally, right, we are seeing the potential of some bull divergence, right? So I do like to see that. Now, look, sometimes when you get a deep move like that, let's see how deep this FSR we talked about. Yeah, it went pretty deep. But ultimately, you're in a position to where you have significant divergence on multiple fronts here. Even if I add in something like smooth, not so much on the smooth, right? So you didn't get the triple that we like, but either way, you're seeing some bull divergence, which is showing there's the potential that, hey, if there's enough people looking to hold out here, you could see a bounce here, and then if you get another bounce, and we have to kind of see where that happens. Now, another person asked me, like, hey, when would I call a bear market? It was a good question that was asked me yesterday. Ultimately, first of all, I don't see that. I could be wrong, but you notice being wrong doesn't matter, right? So at least if I'm observing what has happened at all times, it doesn't really matter if my bias ends up being wrong or anything along those lines, because what really matters is my directional bias, right? So of course the directional bias is that, hey, the majority of the trades are to the downside right now until we at least break this little market structure element, and things might get either a little more choppy or we might look to the upside again. And we'll talk about some true vibration things when people stick around. I'll wait till later. I won't bore anyone, but there were some setups in here going back to the daily scale, right? When you see where this orange pops in right there, I mean, right here, this is a problem. I mean, this is a big problem right there when that happens. This is basic true vibration video type of stuff that we're talking about when we're doing a comparison here, price action of the two. That's why this went orange ultimately. You see these reds flashing in. It's showing that you need this to change. And the way it's going to change is you need to see some blue and some green, right? That has to pop up. Now, the daily takes some time for that to occur. And if you don't believe me, let's just kind of look at the chart history real quick. When you're seeing this red and orange, right? Down, struggling, right? And then finally when you get to some green, all right, now we're going again. But look, you see it took some time, right? You had to run for a few days. So it's not going to show up for a while on the daily. But you can take a glimpse back, and there's not going to be any argument, right? No one can fight this. If you want to say, well, no, I don't really think so, I'm going to say, oh, well, then you're really not paying attention, right? Because green, boom, green the whole time. Notice it never goes red. And this isn't DBI. This is a little different. We're just using one of the basic combination formulas that I've talked about in the video again. I don't want to explain that in too much detail right now. But the idea is red, guess what? See you later, right? Green, off and running, right? Now, we did get a little red here, right? So this is actually something good to show because this was that final formation. So it's not always a death sentence, but you need to leap out of it. See, that's the thing. It's never about knowing the future or anything along those lines. It just means like, hey, if something doesn't change, if I see another bear candle or another bear exhaustion, yeah, I want to be short in this situation. Well, guess what? Good news. It leaped out of it. Perfect, right? We see that market structure change that we're looking for. And they even went green prior to that, right? So technically on the daily, you wanted to break that. H4 was broken earlier, which is right there. And then you did turn green again using that particular system. But either way, you can see exactly what we're talking about in the idea again. Just put yourself into a position to where you say, hey, I know when go time is and I know when it isn't. And that's the idea behind all of this. So going back off the bottom again, we saw the same thing. Okay, back into the questions and then we'll kind of dive into whatever you guys want. All right, it says when applying EMAs on both price and oscillator, when either the price or the oscillator lose the EMA, would it be an exit signal? And if either of them regain EMA, would that be an entry signal? Well, a question like that. So here's what he's asking, right? This is actually kind of what I was just talking about, right? So in this system, let me show you what I'm using on this particular system here is, let's make some of this smaller. I'm using the white line and the smaller purple line, right? No, I'm so sorry. I'm using the white line and the larger pink line here, right? So those are the two levels that I'm looking at. Same thing, it's the same levels on this particular chart, right? There's no like earth-shattering secret or anything along those lines. Let me clear everything out so we have a little bit less of a mess. So what happens? Well, that doesn't change on the daily scale until here, right? Let's see when it changes on something like H4. H4, remember, they both have to be in the center. Now, I'm not looking at price in that situation, right? I'm looking at literally these levels, right? So on H4, you had that occur, you had a warning here. There was a little warning where it flashed, but it quickly changed. And I'm going to explain something very important in a second, so you want to pay attention to this, right? And then on H4, it happened here as well. So you'll know that the third one is the daily, the other one's maybe H4, right? But what's happening? So now I have confluence, right, on H4 between price action and our momentum, right? And it's given me the idea to understand that, look, what am I looking for? Does that mean it's short? Well, you can certainly get to a point where you might say, yes, I can short that alone, right? And there's probably hedge in that alone. But really what it means, right, what that signal, quote unquote, means is that you are now looking for reasons to short, right? What would be a reason to short? Short, bear exhaustion, a swing failure, hidden bear divergence, even better, right? Some combination of all of them. Any other signal that you trust in general that you like to use, that would work as well. So that's the idea behind that element. So you start to see something, once you get that, that's what's going to tell you, like, oh, okay, we definitely want to get in on a short or something like that. Maybe even could be as simple as a local high, right? Was a local high. Basically, I was moving up, and I end up getting a candle that takes out the low of the previous candle. Pretty simple stuff. So here in H4, nothing happened, right? There wasn't any reasons to short in this environment, so you wouldn't have ever got hurt while you wait. Oh, by the way, it could be maybe a true vibration basic short signal, right? This is the potential bear pivot that we have, right? So something along those lines. That's the idea here behind that particular signal. Now, this is where it happened on the daily scale. Okay, daily scale, same type of thing. We're going to wait and say, like, hey, if we get some bear exhaustion, so look what happens right here. Just off this guy's question. Right there to right there, what do you end up seeing? You see a divergence, right? So we have price rises, momentum falls, and then that's immediately followed by a local high. This is absolutely a local high. Why? Price fell, took out the low of the previous candle. Now we're intraday, so you do open yourself with the potential to get chopped a little bit based on what? The fact that you are intraday, right? So things are going to work on a daily scale. The fact that we decide to chop it up in bits of 12 hours, 4 hours, and 2 hours, good for us, right? But that doesn't mean it's supposed to have the same type of flow. That's why you'll see trend lines get taken out intraday and they end up as a wick, right? Or you'll see a horizontal, even more important, that gets taken out intraday, but it ends up really as a wick rejection. Well, those are perfect. That's a good scenario. But if you're aware of that intraday, it's going to help you. That's why we want to say, hey, go to this level, go 1 ATR, maybe 2 ATR above if you feel pretty confident in what you're doing. And you put yourself into a position here to where you say, all right, this is absolutely a short. What happens? Now, by the way, swing failure. I want to zoom in on this because I know this is kind of small. So we already know what's going on in the momentum front. Let's eliminate some. We said we're short here. Remember, we're 1 ATR at least on a stop above this particular level. So we do an ATR, pretty easy. You can look that up on TradingView. It'll tell you what it is. That'll set your stop. Okay. Now when I get this, I mean, this is now, I have to double my position here, right? This is 2 positions because I didn't get stopped out. But what did I get? I got a swing failure. Now, even if you wanted to wait for the next candle for confirmation, so be it. So then at this level, I'm entering again. You see what I'm saying? So we're in a situation here to where you don't get stopped. You end up getting a second signal on top of it, and that's absolutely given it to you. Now, the question was asking like, hey, well, within that, what if price loses that level or gains that level or anything? I was like, well, first thing I would tell you is that's a study for you to do. That's something that you should be looking at and making a determination going in the past. You got to put in blood, sweat, and tears, right? Because you looking at it, that's going to allow you to write it down and say, hey, worked here, worked there, worked here, worked here. Yeah, I like that particular signal. Understand what I'm saying? Because there's not a direct answer to your question, but I'm still going to answer it. I don't care as much about the price. Now I'm going to have a stop, right? What I care about is, does the formation change? And I'll tell you, the more important one in this aspect, now it's always going to be momentum before price. So we would expect the momentum picture to change, right? Especially in a lower time frame. The momentum picture certainly will change, right? And you'll see that at this time, now the momentum is no longer in confluence with the price action. But the fact that the price action still remains in this bearish posture on the EMA is a sign that momentum will probably, in this case, follow. Now, it's following an agreement, right? Because it's still led, because it's led by giving us what? The signal of exhaustion, right? But in terms of the agreement signal, that doesn't happen again until down here, right? So by all means, in this situation, when you see exhaustion, it doesn't mean you have to wait again for them to line up. Of course not, right? We already know that on the daily time frame. We pointed out that right here is where we got that same type of signal. So in fact, we're looking and hoping for exhaustion. I like it to bounce. I want it to bounce. I want it to see a lower high with a swing failure and a bull bear divergence or something along those lines. So that's what gives you that beautiful signal. So to answer your question, I'm not necessarily stopping. Now, of course, it depends. Now, if I'm already in a position, well, then yeah, in the situation where I cross, hey, I don't know where this thing's going. I'm the type of person where I don't mind closing a position and re-entering, even if I re-enter at a worse price. Who cares? I'm looking at it as that trade, right? If getting out seemed like something that felt good for me because I want to protect my money first, then I don't mind doing it. But everyone's risk tolerance is different. Everyone's look is different. It's going to depend on your time frames and things of that nature. But ultimately, what you can see is it puts you into a position to where you'll see you're in better shape. Now, you did ask one question that I liked a lot, which is, what about, and I want to go back to it. It says, okay, the end of your question said, what if they regain EMA? Okay, I do love that. Right now, this is a different situation. So this is actually right here on our screen, right? We see it occur. And it's not just because it worked, right? You know, in this situation, I wouldn't credit this necessarily to the indicator, right? But there is a hell of a divergence going on here, right? You see, you did push higher, and you did see a problem reaching that particular level, right? So lower high, higher high, okay? And it's probably on a higher time frame as well, showing the same thing. So from that perspective, hey, the indicator did what it wanted. I mean, did what we asked, but it's not giving us the setup scenario that we talked about. That was a little more advanced. You know, I would say mastered the other side of what we talked about first. But I love when this happens, when you see a little bit of a reclaim, right? Well, this reclaim, what I need this thing to do is I forever search for a paintbrush that I never know where it's at. One day I'm going to come in, I'll never forget where it's at, but that's not today. Okay. So regardless, you wanted to come in now, you wanted to hold the levels and go again, right? That's going to be a key scenario. That's why you would like it to leap as high as possible in that situation, to put yourself in a scenario where you say, all right, we're off and running again, or at least take out the higher high and have a little bit more of a mixed up picture on the market structure instead of what's clearly been a downtrend. But to answer your question, look what does happen. Now, this is jumping the gun. It's a front run of the play or a lower time frame setup. I bet if you go to the 1 hour, it's probably looking a little bit different, but it doesn't matter. The idea here is that your positioning here is you said, hey, I barely crossed and then I lost both levels again. Yeah, I do like that. I ended up in a situation where there's confluence, and that's the key. If there is confluence, then yes, I do like that reclaim that you spoke about. I like it a lot. Okay. All right. How do you get access to RD? So I don't want to get into any like software type conversations here. First of all, it's free. Don't pay anybody, right? We give you no cost options to get into this particular thing. In fact, there is not a cost option. I don't have an option to sell. But you have to DM me. It's backed up. It's ridiculous. And I'll do this very short. I won't spend more than 30 seconds on it. We go through some disclosures that I have to legally give people some disclosures on this. Because the idea is it is a tool. If you're a terrible trader, it will help, and you can learn by utilizing the software for sure. but it's not going to stop you from making bad decisions that have nothing to do with the indicator, right? So I just tell people be careful. So anyway, we're going to take you through a quick disclosure on that, and it takes you through a couple directions. Now, some people end up having questions, things like that. I have one person that answers those. That person has another full-time job basically for me, right? I don't spend a ton of time, so if you want to just be patient, ultimately, the people that aren't asking a lot of questions are having no problem getting access pretty quick. Other people decide like they want to make their own rules or answer their own things or not answer some questions that we have to ask. And, that's going to drastically slow things down. I apologize for that, but it is what it is from that front. So be patient, bump your message daily, feel free. We will absolutely get to it, and we're happy to give anyone that really wants access the ability to do so. But we're going to go off that. I don't want to get too far into this type of things. I am not mentoring at the moment. I mean, I have a group, an original group, ultimately, that I've always told that they can always ask me anything they want. I'm happy to help them. I have a Discord community for people that utilize, it's free as well, utilize True Vibration. Those people have access to ask me questions and things of that nature. That's also a very cool group. If you ask questions in there in general, they help you out. There's a lot of teamwork, camaraderie, whatever that word is, as well. I have a very strict rule that, no jerks, no a-holes, no problems, love, peace, happiness, help each other. Everyone's on the same journey, that kind of thing. But no, I just don't have the time to do any type of specific mentoring any longer. That was a bear market idea that happened, and that's the reason for it. Okay, I already answered the True Vibration question. Do you get more usage to FSR or smooth vibration, and why? So, the idea between all of these, yes, I do give more to FSR, as that's the primary source of everything that's going on within the indicator. But the idea is really all it is a collection of different views of momentum, nothing more. There's not like magic to FSR. It might seem like it at times. Like some guys will send me something and say, oh my God, look what happened here. This was magical. Okay, well, if you've seen that, then the magic was you seeing it. Good job. You identified it. It's always about the user in that situation. So that's the idea. The FSR is this little purple one here. And, that's our main source. We've seen that little head fake here. And ultimately, you're going to want to see this level. We're taken out, and we want life to live above it for a while, right? But yeah, FSR I give the most weight to because it's the most immediate. It still is smooth, but it's an immediate. But the idea is I like to have multiple looks. I like to have some ideas. And then you want to be very careful. Like I usually tell people, there's a rule with momentum indicators that don't put too much weight into them agreeing, because they're all momentum indicators, so you want them to agree. But I do like to see FSR, smooth vibration, agree on something like a hidden divergence or something along those lines. It does tend to strengthen it in that situation. Smooth is a very basic signal. It's really just used for identifying more likely to be oversold or overbought, which is something that people misuse all the time anyway. But ultimately, yeah, I do love that. The DMs definitely work. Bump your message. Like I said, if the DMs don't work, it's because Twitter literally is the worst. I mean, the worst for both. I should open my DMs and show you. I literally have thousands of messages. They tend to get buried. Just try to bump it. And then, if you want to help yourself, if I was going to answer anything else on this, it's just look back. I promise you, I've looked through some myself to try to help, and I go nuts, right? Because I know what happens. We ask you a few questions, people don't want to answer. Well, if you don't want to answer, don't get the indicator. I'm sorry. Ultimately, they're very basic questions. If there's a privacy issue, then it's not for you, and that's cool. I've had people say, oh, it's a scam. What's the scam? Like the scam of me giving you my free indicator? It's a very strange thing. But again, I shouldn't mention the very few people that are like that, because it is very few. But ultimately, I take the time to kind of maybe review what was written to you again and make sure, like, hey, did I cross my T's and dot my I's? And certainly, sometimes it's just a delay on our side, and it happens. Like I have other things going on, and we may not get to it, and it is a little bit painstaking. I know we're going through some today, so again, pop over. We're going to try to get a response to everyone that has said something. You might notice that I have not been posting about it as well, because I don't want more DMs. We want to get through these, and then we'll try to post again for those that are interested. And also just we have enough people in Telegram that if they want to actively get in on it, then I'd rather give them the access first. Probably next week I'll put another post that gets in some new blood as well. All right. The invite to Telegram now, just type in Telegram and at TrueCrypto28 on Twitter, and you should be able to come across it without any issue. DBI, this one says, again, a lot of people I see, I think they're asking questions without that Q in front of them. If you've done that, re-ask it with the Q in front of it, because I probably missed it. But again, if you want the invite to Telegram, we put one out. Just go Telegram on the search box on Twitter, put at TrueCrypto28. Maybe I'll retweet it later as well. But if you do that, the most recent one should have an active link to Telegram. There's guys in Discord that can help you figure out how to set up a multiple DBI chart. Definitely. This question is, would you use true vibration indicator in day trading position? Yeah, absolutely. 100%. If you're in a day trading position, if I'm looking for short, and I'm looking for market structure to remain the same. I want to see fair divergence, right? And so let's go down to like a 1 hour, right? So 1 hour, fairly ugly during this process. Let's say, right, forget the dump, right? Just even from here when we started to pull back, and I would go 2 to 6 time frames below ultimately. And I'm essentially looking for exhaustion or reasons to long. So what ends up, reason to short. And, you end up with something like this. You say, all right, well, I hit an extreme level, right, on this. And I basically have a huge fair divergence from this level to this level. It's probably happening, certainly happening even on the 30-minute as well, right? So you're in a situation to where you say, that gives me a divergent picture, even more extreme on the 30-minute. Like that, and here I am just looking for a local low. I also have a short coming up on true vibration. This one's not qualified based on how that rule works specifically, but the fact that it's giving you a short, getting bearish structure, you're seeing tails obviously on your candlesticks, and then of course the other thing, the signal within the signal, is your structure, right? So here I am ranging. You better hold that range. The fact that you lose it, we're gone, right? So at this point, even if you didn't find a reason to enter on any of these pivots here, you're seeing something happen here. What happens? First of all, true vibration is lost again on that time frame. You end up losing structure a few candles later, right there. You see the perfect rejection of your now supply zone, right? Where you are, not qualified yet, but supply zone rejection. There's literally multiple entries here. So you had multiple entries there. You had a clear entry here on the breakout. You had an entry right here as well when this failed, rejection, right? So it's giving it to you over and over again. Then, even tightly, something like this. Divergence again. You see crystal clear, sharp divergence, right? See the significant drop here? Yet I managed to make a higher high on FSR, okay? So what would I be looking for? Local low. Well, guess what? The very next candle is local high. I said local low. A local high, which is essentially just the candle taking out previous candle's low on close. It did. You're in. You're safe. You want ATR above that as a stop. Everything's ugly. By the way, we're also in the formation that we talked about, which I didn't even add. What is that formation? White below there. We got the white below our full vibration, which also was already happening here. So this is another clear signal within all of it. Keeping you in that whole thing. You can see just signals after signals. Not to mention the entire time, our momentum picture was red, right? And I'm missing, right? There's more. You also throw in the headed shoulders here. This is ugly. Very ugly. Got one more drop with it. Okay. And then, by the way, at the end, maybe you get caught a little bit. Happens. What about alt season? All right. Not sure if that's a question, but hey. You know what? Something interesting about alt season that people have been asking. Reality is, alt season's been going on for the entire year, right? I mean, alts have done amazingly well. Let me just find this chart here. What else I get? You know, the thing that's been happening that I actually like is that we've been seeing it being, you know, what we would call a stock pickers type of market, right? So anytime I see the fact that there's a few running, that's the ideal scenario for me. I cannot stand when it's everything up and everything down. That bugs me to no end. I can't wait for the day that we see maturity in this market to where you have things that are up and things that are down, and things that are up and things that are down. That is what's ideal, right? So let's go to something like, oh, is it the right chart? Hold on. All right. Instead of worrying about all season, right? Let's just look at the individual plays, right? So what was this? Luna, right? Luna went crazy. What am I showing you? I'm going to show you this one. This is my little litmus test, right? So all I'm doing is comparing the alt to the entire market. I know I got a mess going on here, so I'm not trying to blind you. If you guys, again, I'll never stop repeating this. If you think that I'm trading with all this stuff on here, I do not, right? I'll literally have price action. I'll have the true vibration on. That's basically it. This is analysis, right? I don't know if you can see this on your screen. This is analysis. Let's just kind of give me a multi-frame look at things. But what this does here, all I'm looking at here is the yellow line is going to be the indicator, the asset, and then I'm comparing it to the rest of the market, right? So what happens here is this alt, everyone knows I was big on Luna, right? Oops. So pretty simple stuff. I mean, this is H4. I mean, you go to daily and stuff like that. But what you can see is, okay, well, is it outperforming? I'm going to show you this with Bitcoin as well, kind of just to kind of show the bottoming aspect. You know, you guys got to build systems that work for you. Ultimately, they might look magical. It really isn't. Just looking for outperformance, right? Well, it's at this point where, you know, you start to see that. Now, you got a little head fake of that right there as well. It went off a little while. But normally when you see this, you don't get crushed. Right? When it starts to outperform, you know, trade the strongest, right? Trade the fast horses, right? Things like that. You don't bet on the slow horse. Don't go to the track. Oh man, that horse looks like a fat, out of shape, slow bastard. Let me put all my money on it. It makes no sense, right? That's the XRP horse, right? Why? So that you could sit in the position for 4 years. I mean, it's the dumbest thing ever, but it is what it is, and there's no offense to anyone that's holding XRP or believes in it. That's totally different. You believe in it, there's nothing wrong with that. That's a fundamental position. Take that position. But if you're talking about technical analysis, don't dare tell me you've been in that for 4 years based on TA, because it doesn't exist, right? So you're in a situation here where we say, all right, outperformance, right? You can do whatever you want. You can do Luna versus Bitcoin, you can do Luna versus ETH. It's very easy. Just type that into your symbol here, and you'll get this type of look. But for me, I like to look at it this way because it does tell me, like, all right, well, from this level, I'm showing the potential of outperformance. Now, all these are just moving averages over here, which I want to get rid of that one. And now I'm looking at it versus the market and its own price action. Again, you see the type of things I look at, they're pretty simple. It's just confluence elements. Well, guess what? At that level, that was essentially, even if I waited for the confirmation on price action too, still got me in at 50 on something that ran to the high 70s, right? So it's a nice position. And you'll see that when these guys are outperforming, right, in these type of scenarios, you'll see the big moves. By the way, this process that I'm talking about actually began way back here at $8, which I was not in at that point. But you can see it, right? And if you're holding your moving averages while in this position, again, this is gangbuster stuff. That's what you want. You know, we'll take the obvious ones. Like sold. And again, you do just sold Bitcoin. Sold USD, same thing. Just put on some moving averages so you can see it. But I like to look at both. I like to see it versus Bitcoin or Ethereum, and it versus just normal USD, right? So that I can see the comparison of the two and understand why. Well, because I'm doing so Bitcoin, maybe it's really outperforming Bitcoin, but maybe Bitcoin's just really sucks at the time, right? So I could lose money in that situation, that environment, if I'm doing that. If I'm only looking at that chart unless I was trading that chart specifically. So if you're going to be trading versus USD, keep an eye on it, right? Well, what you'll notice is that, all right, well, when they began to have some problems, right? So this thing was outperforming for all of this major move, but don't you see it coming back into the moving average? What do I have up here, by the way? Why do I have another moving average? Sorry, it's just bothering my eyes here. Oh, I see. I don't have that 20 on. I don't have on there. No, I'm not going to worry about it right now. But the idea here, right here, you see the outperformance on Sol. Again, this is after it was already booming, but what it led to is a move from even at the top of that bar, 176 up to 258, right? Same type of thing. This is why I would say, like, hey, I thought that I'm looking for alt season. I mean, that's usually going to be me looking at ETH versus Bitcoin, where Bitcoin's doing pretty well and ETH is just significantly outperforming. And then, yeah, it's probably alt season of some sort. But, I mean, it's been alt season all year. And even what I like about what's been going on is there's been a lot of these selective alts as well that will still give you a run. And it's interesting, like we're in this like meme coin society, both in stocks and in crypto, which is cool. Hey, you know, if they want to game the system, let them do what they want. But what it does show is that you have that herd mentality. Now you gotta be careful, right? You don't want to get slaughtered as well. But at the same time, if the herd is looking at it, then yeah, I don't mind having some kind of piece involved in that. You guys probably know that I had a hell of a SHIB position, right? Which it's just not me, right? That's not who I am. But if I see something technically that looks well and suddenly it's outperforming, then well, I do like money, right? So I am willing to trade it in that situation. But again, yellow line, all very simple. I'm above the moving average. So whether this was Sol versus Bitcoin and it's above all the moving averages and it's all above all the moving averages on USD, yeah, I'm looking for reasons to long, right? Very simple stuff, market structure stuff, you know, higher highs, things of that nature. Bear exhaustion, if you should get that, thank God I see something like here, more complex, but hey, you start to see that bear exhaustion. This is a bear exhaustion with a bull divergence, right? So bull divergence right here after the exhaustion point, making its way up. Even if you waited till you got a cross over here, it still came back for another bigger retest, okay? But then there was no situation where you're really hurting here and you catch a big move, right? So that's kind of the understanding. And then also, we can look closer here and say, like, okay, pay attention. Like if suddenly you start to see the cage rally, you guys probably know I kind of use a daily to 4 hours in the most popular scenario that most do, where I'm looking for the 4 hours for that potential weakness. Doesn't mean it's dead or over or anything like that, but what happens here in this 4 hour, it's like, all right, well, this was a warning sign, right? You know, something like Sol. All right, well, really you've seen a warning sign even losing that blue 21 in there. It's like, okay, well, that hasn't happened for a while. So we started to see a lot of this chop come into play right here. And look where this is. Let's really pay attention to where this happens, right? That happens for the first time from 200 to 278. Hell of a run, right? Don't underestimate it. And then we get at 247 that warning sign. Like, why suddenly is it not outperforming the 21-day moving average of the entire market, right? Or of Bitcoin or of Ethereum, right? So then I have to pay attention to that and understand, like, hey, there's some risk. That doesn't mean necessarily short. You have to do a little other technical analysis for that. But notice while everything else was green, just doing a little bit of comparison can help in that environment. So I think it's important for people to understand instead of thinking like, it's alt season, everything's going to go up. No. There's going to be traps on most things while a couple things still run because people like to buy things. Right? Now, by the way, you know, people don't want these questions, obviously. Sign off at this point. You know, plenty of data is fine after they got the market update, but I'm happy to stick around a little bit and answer some questions. So. I'm looking through for some questions again just to see if we're at. All right, I don't know. That might be it. Let's see. I'm going to look to see if I missed any. If you have any, just throw them in quick. If not, we'll kind of jump off this guy. Obviously, we're getting dumped on at the moment. Yeah, I don't see anything on this. If you guys want to repeat it, I'll hang out a little bit. But again, everything again super clean. It's hard to argue when things are clean, right? So, I mean, this is like a 2-hour chart. Like obviously, depending on what chart you're looking at, clear everything off again. Just you can look at this most recent price. Which doesn't mean you played it again, right? But what I like to look at is it's not, hey, did I play that? It's like, hey, was something just a total surprise? Well, what happened here? We're still in again this bearish structure. So depending on what you're looking at, remember here we are. Just using that same basic look that we've been talking about with the true vibration agreement here. So on this 2-hour, you're in a bearish look, that white under the pinkish color that we have here in the moving averages. Well, yeah, you saw price get it. Remember, that's what I said. It's not about price. We're not looking for price to get that. We need price to get above it and get this moving average back above, and that needs to be living above it. And then we still need to see a pivot above them as well, right? So you want to see this thing pivot. Now, price can lose it a little. Let's find an example of a reversal. In fact, let's just go to a 4-hour for that. So that's a little bit more reliable in that situation. All right, so here's a decent example on H4. Now, obviously, you need to make that higher high. It didn't happen. But you end up getting this range where you're stuck between the 200 and this 45. Use 45, 50, 55, I assure you, they're all the same. 45 kind of comes from the traditional markets where you're just looking at 9-week periods, so it's 9 5-day sessions is how they would look at it, but it's still a number that tends to work pretty well. But the difference between a 45 and 50 and 55 they're basically the same. What the key is, what you're using, how to play it, basically, how you're utilizing it. That's what's key. So what happens in this situation? You notice that price did reclaim it. And you actually got a situation to where the moving average is reclaimed as well. But what did we need in that environment? You needed a pivot that now makes a higher high. Forgetting even the past situation. In this, you want this thing to pivot for price to get above that level. That's what's going to open the door for the moving averages to begin to move in your favor. Until that time, it got up into a nice trap. That's a trappy look. And then it dumped out, right? And the fact that you lose structure after that, bad news, right? That's why you get such dumps, because there was a lot of hopes and dreams and things like you start to get hopeful in that situation. Oh, let's long, let's 10x, let's 15x, let's 20x long. Yet, holy crap, we're screwed on that particular candle. And they all run, right? They all run for the hills. And that's basically what you see. So that's the idea behind that particular setup right there. And I can show you when it does work. Once you do get an actual reversal, let's just kind of go back in time. I want to come off. I'm not looking for these because I want to come off of a pullback. So something like this. So, first thing obviously is what? A trend line in place. Like we said, you need to get rid of that primary downtrend line. You end up seeing a situation where you say, all right, well, finally we get the cross. But that's not what we want. We don't want just the cross. We need a higher high after the cross. Guess what? You get the higher high off of the cross right there. That's what you want, right? You want it to cross, and then you're going to have some element of a rectangle always, right? There's going to be some type of rectangular zone here. And now that's your war, right? This is a key thing. Like, people need to understand this. Like, that's where your battle's at now. To say, all right, well, who's really going to win this moving average situation is going to be the one that can now take this particular zone higher. And you get that close right there. All right, that's exactly what we want. By the way, it just happens to coincide with what? The downtrend line break. That's that confluence element. And then these as well. Like, I'm going to show you exactly what we spoke about. So the momentum picture changed, but we need the bull pivot, right? We need to pull back and then show its willingness to rise again. That's a bull pivot in that environment. Even this little one right there, even though it didn't hold, right? And by the way, once you see those bull pivots, you also, ideally, the lower time frame is a little more tricky. You want to see that then become a support, right? And now I would go ahead and I would make those a box, especially in the lower time frames, where I'm going to go from the low of the candle like that, because you could always have a swing failure that peeks its way out. But in that situation, you say, all right, well, I'm up here and I bull pivot. Okay, let that become a support, ideally, right? Otherwise, we have to start thinking about a bigger range again. So that's another thing that can help you with things like stops, new positions, things of that nature. But this thing is allowed to do a reset of sort, right? So you have a nice reset and then go again. All right, let me check if there's any more questions. There are literally a dozen tutorials on true vibration. I think they're actually You actually have them inside of Telegram where they're pinned there, but I'll double check it just to make sure. Anyway, other than that, looks like you guys are out of questions for now. I don't mind doing this again Monday to see where we're at. Let's kind of see where we kind of end this week. Again, range bound, right? So when you look at the higher, by the way, I'm going to show one more thing. The 2 week, like, everything's about perspective in this game, guys. If you look at the 2 week, this is why I'm not highly concerned. Now, again, what have I said since 66,000, right? Your shorts should be, the majority of your trades are going to be on the short side until proven otherwise, right? And we've lowered those targets based on market structure on the 4 hour. But when I look at something like the 2 week, let's see where we close. That's 9 days out. So it's not even this week close, it's going to be the following. But you have something interesting here, right? You end up with this structure here where you say, all right, look, not only did I never take out highs, right, on close. So we never made that 2 weeks something that's very big. So you guys know with the big money crowd, right? You're talking about institutions and things of that nature. They want to see 2 week highs. That's, I promise you, right? I worked in this business a long time. That's what they want to see, right? They want to see that 2 week all-time high above, right, the wick, right? Well, guess what? In fact, you have rejection, okay? By the way, the picture looks very healthy in terms of momentum and things of that nature on the 2 week. Market structure looks healthy as well. But not only does it look healthy, you're also in this environment where you may hold, and you got 9 days to fiddle around here. A lot of things can happen. But if this candle in 9+ days holds this level again, all right, now you're talking about something that had one hell of a hold, right? And you could be in a position to where you have a very nice structure on that. Now, who's trading on the 2 week? Nobody is, but for analysis purposes, that is something that I'm certainly paying attention to because it could be interesting. If not, look, we didn't talk about some of the other elements. It's like, look, you do need to hold this particular range if we're talking about what's been going on here. If it looks like a range, play like a range, right? So you're range bound until you're not. But ultimately, you're in a situation to where, look, you can see the bottom of this particular range without issue. You can see a swing failure to that. And then you have to be also open to the reality that you could lose this particular range. If that were to happen, now we're talking about really extending this range to something bigger. I'm not going to write any text. I don't really know how that happened. But say I drop this area. Well, now I'm literally looking at something like this and like this. And you have something that's unbelievable. And by the way, doesn't change anything about dreams of 100, 200,000 plus, because if you hold this entire range and structure, I mean, what is this? This is you're basically building up that momentum you need. You're going to see a squeeze if I put in something like a Bollinger Band where these guys begin to squeeze. If you go to a 1 week, you'll see even more, right? You start to squeeze down and get things a little bit tighter, which means what? The possibility for a high time frame move. Which would be something that's epic. But until then, again, it's playing what's in front of us and seeing like, hey, what's next is going to be based on what has happened and what we understand. So until we see that change, just start with that 4 hour market structure break until the bulls get that. Why would I consider anything else? I'm just basically biding my time and waiting and being super patient about it. But ultimately, the patient people, I promise you, in this game, what's happening is that people are getting chopped up and beat up. They're trying to be early and thinking to be early. Why? Why the hell do you need to be early? I'll give you an example. Now, I know on this channel and in our rooms, we smelled this thing out and we're quite bullish down here, right? But I think the number I needed was 32,000, right? Until I said, all right, let's really go for it. It was 32,000 and change, which is on Twitter and things of that nature. But notice it wasn't 29. I know we had some tweets about, hey, buy 29. Now, I'll make tweets about buying long-term positions, right? Yeah, a good, solid spot for a ladder to ladder in over time and make a bigger purchase. There's plenty of spots for that, right? And not one of those was 29,000 that we talked about back here on this drop, literally on that day, on that moment. And then over here again, same exact tweet, right? But that's different. That's not trading technically. Now, the technical trading that we were speaking about, that began at 32,000, and then we talked about the backing up here to hold this particular 36 level, which it did right here as well. But the idea here is that I didn't need to be early. I don't need to be early because being early is what's going to get you in, here or here. Look, I'm going to be early here. I'm going to be early here. I'm going to be no. Don't be early on those. At least let it show you something. Now there's plenty of long trades in here that would have worked out well, but the point that I'm trying to make, and maybe that wasn't the best example, is that let it show you something. And then based on that, let me just give this example here to say, all right, well, if I took out this high right there, okay, good, I'm long, but if I fall back into the zone, I'm out. I thought maybe it was showing me something, it didn't, I was wrong. That's trading, no big deal. I protect my money first, and that's the key. But if I'm not wrong, this thing should show me that there's follow through, right? If there's a big push, there should be follow through, which there was, obviously. So we started to see that. So just keep that mentality and understand that while you're being patient, there's plenty of people that feel they must trade, and those people are getting chopped up, and they're literally setting up that next big trade for you. So that's the key there. I'm just kind of going back to this particular litmus test chart that we talked about. If I look at something like Bitcoin, which, by the way, let's see on the 4 hour, it has started to show a couple of thrusts into this level here. But if you look at where they bottom, like normally in a situation here where you really get in the bottom, you will see Bitcoin begin to outperform the market, right? That normally happens, and you may even see a divergence in that, right? So you see this is one where it starts to outperform the market a bit, divergence, right, to even make another lower low and then go. But at least get above these levels of outperforming the market. If I see that, I'll put it on Telegram when it happens. But we've seen it try. We've seen some interest in here, right? There's certainly some value buyers in there, right? But are they waiting down here? We'll see. It makes sense. And by the way, we talked about this just a couple minutes ago. Maybe they're waiting down here, but maybe this level breaks. That can happen. But ultimately, I'm sure there's going to be some value players here. Is there enough though? Can they hold price? Is it even going to get there? Time will tell, right? So we have to see. Maybe that level gets held up here. It's always about that. Nothing's written, right? You don't know. You don't know that there's someone here that says, no, I want 100,000 Bitcoin. I'm willing to spend 47,000 a piece. Well, guess what? If that's the case, that price is not going to break that level, and you're going to see it off and running because at some point sellers aren't there anymore. So that's kind of the idea. Instead of having some anticipation of, hey, it's written and someone knows and they got the Elliott wave and it's 5 counts, right? And nothing against the Elliott wave, and God bless you. And there's a lot of benefit that can come from understanding waves and understanding 5 counts and things of that nature. But just keep in mind that the greatest Elliott wave trader in the world has missed for the last 25 years. Has been calling for the ultimate bear market for 25 years, right? In the stock market, 25 years. So don't think Don't put yourself in a position where you feel you have to know. Let it show you something and then go from there. I'm out of here. Hopefully all is well. We'll talk very soon. Take care, guys.